Hi, this is Joel, and today I'm going to talk to you about lessons from a failed trade that I had today, because I do not have a playbook trade. So, big picture, the market has not fallen apart amid negative news the last 2 days and also gapping down pretty largely. Um, Today, the market's gapping up because the futures are up, uh, and it's holding 247 level in the pre-market. And some specific information about IWM. It's an index ETF that's tracking the Russell 2000 index, which is a 2,000 small cap stocks that make up the Russell 3000. It broke underneath a long-term support last week, I believe. I'd have to check though. Um, and it found support at this 131.54 I have in there, but it's really like 131.54 to 131.60 something, and it's bounced from there every time. So there's buying clearly occurring there, and it's been showing relative strength to the market. It doesn't see like the huge down moves relative to the market each day. So before we get into the trade, I just want to point out here that this is my game plan that I came up with this morning. And I should say that I come up with these game plans at like 6 in the morning when I wake up, at my freshest. I'm drinking coffee, really thinking clearly, and hopefully, I think, putting out my best mental effort for the day. And so, a lot of times, when I look at these game plans, the stuff I write down is actually pretty good. And if I followed them perfectly, or at least, especially right where it says game plan, and did these things, I'd be getting in some good trades. And what seems to have been happening to me is that for a while, I just wouldn't even think. First, I didn't have a game plan. Then, when I started making game plans, I wasn't really following it or trading around the levels I had down. And now I do a pretty good job of at least sticking to the levels I have. But as you can see today, I made a trade that turned out I didn't have the level on here and I didn't have it in my game plan. So what I did have in my game plan is if I could get it down at that 131.60 and it was, just try to get it there. And if it bounced away quickly, then I would want to be long it. Um, and also I have on there, okay, if it comes down and tests the 133 level because it was above there, and the market is looking strong, try to get long there. Um, I also have in there a provision in case it were to like seem like it was going to fail that level it's tested the past few days, but we didn't even get there. My point being, the trade I'm about to show you is I tried to short this at the 134 level because it looked to my eye, not factoring in any of this other stuff, it looked like it was about to fail because on the open it kept popping above, and I've seen stuff like this before. However, as I'll show you, when I was looking at the pre-market, I didn't pick 134 as a level. Um, and also, Steve Spencer, in his morning game plan, didn't have 134 as a level. So this is a case of my game plan. If I would have followed it, I never would have been in this trade in the first place. And it's also an example of needing to look at a larger number of variables before getting in a trade, because upon review, this was a trade that, in fact, I should have been on the opposite side of, and it actually would have turned out quite nicely for me. So, moving on, let's start with a video of the actual trade so you can see what I'm talking about. Okay. All right. So you can see here, it keeps getting above 134 and dropping before it gets to 134.10, really getting up around 8 or 9 cents. So I'm looking at this and I'm like, man, it keeps trying to get up. There's a long wicks. I want to get short this and put my stop above 10, above the 10 cents there. And you can see, um, and for a while I was like, man, this might work out. And that was just, I mean, like I said, apart from anything else, that looks like that could be what's happening here. But as I'll show you on the next chart, um, the market was actually looking quite strong here. So I should have really done something, not done this trade really, because I didn't have it in my game plan. And that's something I've really been working on, is following my game plan. And my number one goal for today was to get a perfect score on my report card, and I had to not give myself that because I technically did a trade that wasn't on there. Although I will say I wasn't even aware in my head. I thought this was a perfectly logical trade, but it just goes to show you if you come up with a game plan at 6 in the morning, you need to review it at 9:30 in the morning or 9:15 in the morning. You can see I got stopped out there um, before the open, so you can remember exactly what you wrote down when you were thinking clearly. So here's the number one reason why I shouldn't have taken that trade. Um, so the SPY was gapping up $3, roughly $2.50, $3. You can see on the open, this is a 1 minute chart, but it's also holding VWAP on the 5 minute chart. It comes down and tests VWAP, bounces. Test VWAP again, bounces. And now it's basically holding over 247.50. And around here is the time that I made the IWM trade. And if you're looking at this, you got to be saying, okay, yeah, look, there's this level from yesterday. It gapped up there and it's pretty much been holding it in the pre-market. And also, if you were me and you'd been sitting here watching the stock before, you saw yesterday, or maybe it was the day before, buyers stepping up at 247 and then a huge move taking off from there. So from the looks of this, it's basically just consolidating, and you can see, the rest of the day, I think it got up to like, I think maybe, where did it get up to? 253 or 253.50, and it closed around a little bit lower than that, but yeah, so in looking at this was not a trade. If I had been looking at this before I took that Russell trade or the IWM trade, I wouldn't have actually made that. So some things I did well. It seemed like a familiar setup, and I went for it. But it was only a familiar setup in the sense that it looked like a level about to fail. But you've got to, if you want to come up with a thesis like that, and it was something I was going to hold um, for a move down to 133, you've got to have some other corroborating factors, I think. Um, I don't think that would have been a bad trade if I had that level in my game plan and I would have decided I was going to try to scalp that range. Then, as you saw there, I was up like 13 cents at one point or something like that. But if you're holding it and I'm waiting for the level to actually really fail, this wasn't the right trade. And like I said, this wasn't something for improvement. This wasn't something that I had identified in my plan for a good reason. In my, what I'll say, my right mind, awake, alert, really thinking, I didn't identify this as a level or something I was looking to do. So, gotta do a better job of being familiar with my plan before I start trading. And then I didn't, while I was trading, even though I had on the left side of the screen there, you could see the both the IWM and the SPY charts. I didn't do a good job of using that information. And what I mean, I say particularly the SPY, using that information when I was making that trade. And the two things are obviously going to be somewhat related to each other. Well, the other thing I'll say is this IWM has been showing relative strength to the SPYs the past few days. In terms of when the SPY is making a big down move, the down move for the IWM is not as pronounced. So even more reason this is showing strength on the day. And IWM has been relatively strong compared to the SPY. No reason to think that this business here is going to be a big failure of the level. So anyways, that's my review of a trade for today. So we'll call it a playbook trade because it's not something I'm looking to repeat, but it's something I was looking to just learn from and thought I would make a video. So thanks for listening and have a good weekend.